You're
Can you hear me?
focusing on, yes, I can hear you. You're focusing on energy efficiency and industry and transport, as well as climate change mitigation. So I'm
Correct.
very interested about this project and what you're doing currently. So please tell me more about it and how impact of food systems uh, on global greenhouse gas emissions and additionality play in there.
Well, thank
Thank
you,
you.
Alexandra, and thanks to the Smart B team for the invitation. I'm sharing also my screen. I don't know if you can show that.
Now
Great.
we
Now,
can. Yes, it's starting. There you go.
yeah, just a small disclaimer, as a previous speaker did, and this is not a marketing presentation. I will discuss some things related to a product that we're about to launch, but it's just for the purpose of showing how we measure impact and how we address additionality, and how is the proctor being structured. But not at all is an invitation to invest or marketing presentation. Just for you to know a bit more about responsibility, for those of you who don't know about us. Yes, we're a sustainable investment house founded almost 20 years ago. Now we manage close to $3.5 billion in different business lines. I will get later into this. I have more than 240 colleagues across 10 offices from Lima to Bangkok. Because of the nature of our debt, it's revolving facilities, most of them. So we have disbursed cumulative more than $10 billion since inception of the company. And as I mentioned, we do this in three main business lines. Financial inclusion, where we provide debt to SMEs, microfinance institutions, and fintech companies in emerging markets. As you mentioned before, and my core focus so far is on the climate finance team. There we manage funds that provide energy access in sub-Saharan Africa, renewable energy, and also finance energy efficiency projects through financial institutions, always in emerging markets. This is our focus. And the topic that brings us here today is a sustainable food and blending with the business line. And in the sustainable food space, we have a track record of more than 15 years. Mostly my colleagues. I'm now moving into this space, where we provide debt to farmers and processors and aggregators of agricultural commodities in emerging markets. And thanks to this, we have supported and trained more than 300,000 farmers, especially in sustainable agriculture practices. All these numbers, big numbers in the past slides, can be big for all of you, but for us, each of them is a development story. For example, in the case of the sustainable food business line, one of our first investees was rice processor in Cambodia. It was a very small company sourcing from 100 families, and one of the main issues, and going back to previous presentations during the today's session, they did not have access to capital in the local bank. So they went to the local bank to ask for money to grow. But being a small company, they don't have any properties or any collateral. So we saw the opportunity for them to grow, finance them, and now they're one of the largest in the country, sourcing for more than 10,000 farmers. So this is 2 orders of magnitude growth in number of sourcing farmers. And it's one of our flagship investments in the country. But still, since 2005 and 2003, we're working in climate finance and sustainable food as separate topics. It's true that we have some exposure to agriculture in the climate finance business lines, thanks to our work with banks in some countries like India or Sri Lanka, where we finance drip irrigation loans, solar pumps, so things that are related to energy efficiency and renewable energy, but very small scale. But as we know, and this is very relevant, and you asked at the beginning of the presentation, the food system account for almost 1/3 of the global greenhouse emissions across the whole value chain, from land use to our consumption. 40% of the food is lost across the value chain. So there is a large opportunity on saving emissions that I will mention later. But it's a bit of a dilemma, because 45% of the deaths of children below 5 is because of undernutrition. So we're losing for food from one side, but having not desirable outcomes from the other side. Productivity has been always the main word in this in the food system. More productivity, more employment, better income, better societies. But of course, the food system is also the major driver of biodiversity loss. And this is something that was mentioned also by other speakers today. Why to grow crops or raise cattle? So there was a clear opportunity to blend both world, our climate finance practice and experience with the sustainable food business line. 90%, but I would say 90%. I'm making up the number. It's a large part of the NDCs of the countries are focused on land use, improving sustainable land use, forestry, afforestation, but the food concept is still very neglected in those commitments. But there is a large potential. Again, we mentioned that 1/3 of the emissions come from the food system. So there is also a large potential if we improve the whole value chain. Of course, sustainable land use is a very important piece, but reducing that 40% of food loss and waste is key. Improving the energy efficiency of processors, cold chain plays a key role here. And of course, the consumer behavior and shifting to sustainable and healthier diets will have also a large contribution. So only by addressing those additional topics to land use, we can reduce emissions equivalent to almost all the passenger cars in the transport sector, which account for another quarter of emissions in the world. With this in mind, we came with the idea of launching a debt fund that is now close to be launched officially in December, hopefully. It's around $200 million and it's intending to provide debt and working capital loans to SMEs across the whole value chain, from the farm to retailers, to improve their agricultural practice with a key focus on climate. This is not, we are not the only ones working in sustainable food and sustainable agriculture. The opportunity is large for everyone that wants to enter into this space. At least $350 billion per year are required to transform the food system. The expected return on investment is almost 15 times in terms of new business opportunities. Also avoided cost, again, biodiversity loss, environmental damage, health issues. So there is also large potential savings in indirect ways. However, we are all fully aware of this, but only 3% of the cumulative investments in climate finance are allocated to sustainable food and agricultural investments. So this is why we saw the niche and we saw the opportunity and are working in this new fund that has raised a lot of interest, especially from the development institutions. Then there are some speakers later talking about the multilateral development institutions and their interest into additionality and investment. So most of our investors in this space will be development institutions, but some private investors are interested too. In terms of impact and starting to talk about the topic of today, we came from a, let's say, business as usual practice on climate change mitigation. And this probably topic with the COP next week is a hot topic. We mentioned again that there is a lot of emissions coming from the food systems. So climate change mitigation was our first outcome and first challenge and main KPI. But discussing with investors, we also realized that climate change mitigation is starting to be not enough. So they're also looking to adaptation, resilience of farmers in this case, and linked to the food system at all, the productivity. So we're talking about also increasing population of 2 billion humans by 2050. So that net zero challenge with increased population and the necessity of having healthier diets and more nutrition is also a challenge. So increased productivity while keeping down the emissions and ensuring the adaptation and resilience is key. So at the end, we have a lot of colorful SDGs and targets, which only increase the complexity of proving the additionality of our investments and also keep track of the investments and monitoring the impact. On the climate change mitigation side, we're expecting to save or avoid close to 800,000 tons of CO2 per year. This also make also think about this because it's the savings per dollar invested are almost twice compared to our standard renewable energy and energy efficiency funds. On the adaptation side, we're talking about close to 300,000 hectares, and we aim to reduce food loss and waste by 20% in our investments. The main way to do this is improve packaging and improvements in the cold change. But again, and as was mentioned in the previous talk, so all these SDGs that are here have specific targets and specific KPIs to monitor and track, and this is when the complexity kicks in and the barriers. We're talking about a portfolio of several companies that are focused, again, from the farm to processing of coffee, cocoa, and different commodities, packaging, processing, again, not only the raw commodities, but like derivatives, logistics, retail. So at some point when discussing with investors, they start to think, okay, this is not the standard things that we know in renewables and energy efficiency. So it's really additional, and it's hard to explain the connection and across the whole food system and how we can help them. So it will really need more complex and diverse monitoring. Example here, some investors, especially in Europe, were worried because the agriculture is so far. I'm sorry if it's already now because I received an update last Friday on the EU regulation that I haven't had time to read yet. So agriculture was a non-eligible activity under the EU taxonomy because of the complexity and the discussions that are still going on the EU and the agricultural sector. So far it's considered not eligible. So if you want to have an EU taxonomy aligned product today, then agriculture will be an issue. Second, we also want to provide finance to companies in early growth. And this comes to our example in Cambodia. It's not easy. It's risky for investors, especially in early growth. It's difficult to measure the impact. There is a gap between the moment of the investment and when the impact kicks in, let's say. And also it's difficult for companies that are in sectors that support the whole food system. So here we talk about technology companies in the agricultural sector, such as satellite or weather data providers that support farmers. But if I ask, for example, to our previous speaker how to measure additionality of a weather service provider with satellite monitoring and how this impacts into the adaptation and creates resilience for that farmer that have better information on weather, then it would probably be hard to prove and provide all that evidence that we saw in the previous presentation. We're trying to. And then with, of course, and this is a characteristic of responsibility, we try to provide long-term finance and engage with the companies in the long term. And also in terms of additionality, sometimes it's hard because there is a split between capex, something that you can really see, an asset, a new processing factory, extended hectares for cultivation, but there is also working capital, money spent in training, and changing the agricultural practice that is not sometimes not taken into account. That's why this type of funds require a higher share of what is called technical assistance, meaning that some investors or other institutions have to put a separate amount of money, not expecting return, just to support the growth of these companies and for example, training and environmental and social assessments, climate risk assessments, and the things that are not directly linked to the investment. Here, and this is something that was mentioned before, one of the key solutions is a partnership. So, and to be partners with someone with not only reputation but track record and power to support us here. And this is why we partner with the CGR. Probably the persons listening to this know the CGR, but it's not that known as it should be. And we were discussing during our agreement, just the Bill Gates book came in, and he mentioned CGR like something that probably not too many people know, but that is changing the way we live and the way we eat, because they have really innovated things in the agricultural space. It's a network of more than 8,000 researchers, 70 countries with 700 partners. So we are one more in that long list. There is supported the design of other funds. There will be providers of technical assistance in our case. So I suggest you have a look to CGR and know more about them, because they're really doing great work. I don't know if they're listening, but it's good to have them as partners for this project. And yeah, just to talk a bit more about the additionality and the impact measurement. When talking about the food system, again, we're going from what is called a farm to fork across the whole value chain, and monitoring all those SDGs that we saw in the slides before. And this is quite hard. We will need to do several monitoring in different phases of the investment, and from on-the-ground surveys, we're talking about a massive number of farmers, 300,000 hectares, in which we will need to measure soil health, monitor tree cover or land use, all of this to estimate change in greenhouse gas emissions, soil carbon, define sampling plans. A part of this, as I mentioned, mitigation is just one of 3 KPIs that we want to monitor. So we need to understand how the livelihoods has improved, gender equality, income improvement, so how the financing is being used. So all of this will suppose a heavy amount of investments towards just the monitoring. And it was mentioned also by other colleagues today, all of this to provide comfort to the investor that this is really additional and really impactful. And it's a long-term support that will go across the lifetime of the fund. And here is where all the innovative process that has been described across today's presentation needs to support us. Some all technology-related measurement that can help us improve and simplify the work here would be great, while ensuring the integrity and the additionality of the investment. So then that's the red line that we should not cross ever. There are some things in which CGR is also helping us, but there's for sure some other partners that can help us here. And finally, a lot has been said also on credits today. Here, additionality, we need to say, in the credit space comes with a price. And you saw before how complex is to prove the additionality. This creates a risk of excluding some actions just because of the initial transaction cost and the monitoring transaction cost. If so far for this product, we're not considering issuing any carbon credits because of this, because of the transaction cost at this point would be too high, and if we wanted to have a full product only with credits, that will leave out some investments. Again, we could not invest, for example, in the agricultural technology companies, weather data providers, because they won't issue credits at this stage, for example. We have also had discussions with some other investors, and there is a bit of a discussion between the international climate finance claims linked to carbon credits. Some investors may think there is a double counting issue. We think there is not, because I think it was mentioned also before by other colleagues. So even projects that have revenue from carbon credits, they have lack access to proper finance and adequate financial solutions. So for us, it's complementary, but it's true that for some investors, maybe a double, let's say, concept of double subsidy in this case. Hopefully, the carbon markets will take off. Let's see what happens next week, also with Mr. Carney task force, and the price will go a bit up. This will help us to mitigate the risk and make the transaction cost more affordable. But again, we need a clear set of rules and ensure the integrity of the credits. There is a large reputational risk that we need to take in mind there. Mm, and also, yeah, there is all the complexity I mentioned in the previous slide about measuring, for example, soil carbon. The standard for soil carbon came from one of the ones I know. It came from gold standard only last year, and it's quite complex to implement. But it's true, they want to ensure the integrity, and it's a strong process to follow. But this, as you can see, that even if the carbon market is growing, and it's growing especially in the land use sector, it's growing mostly in forestry. So agriculture, while food system, again, going back to the beginning of the presentation, is 40%, sorry, 1/3 of the emissions, 40% of the food is lost. So it's only 1% of all the carbon credits issued are in the agricultural category. Something that you can also check on many references is the potential of soil carbon, and there has been other presentations across this. Is almost between 1 and 5 gigatons of CO2 per year. This is almost 10% of all yearly emissions of the world. So there is a large potential of carbon storage in the soil. But again, just to prove the additionality and how many tons are really being stored in the soil per year, it's quite hard and complex process. So yeah, hopefully you will hear more about these products soon. Again, there is a lot of investor appetite, especially from the public sector. So please follow us. Unfortunately, I won't be able to stay for the networking, but happy to answer your questions now. That's why I tried to keep the presentation short to have more time for interesting discussion now. I'm happy also to follow with you bilaterally after the event or later. So, thank you again to the SmartBee team and Alexandra for the invitation to present today.
Thank you too. That's definitely a topic we need to be aware of, and a shame you can't join us for the networking session, but I'm sure our attendees can connect with you on social media via email. So great. Yes, you have
Thanks.
your email address on the screen. That's amazing. Yes, and we have a couple of questions for you.
Please.
One being, oh yeah, great presentation from Hanya Osman. What is the likelihood of adaptation of innovative measurement approaches for your investors? That's a good question.
Tricky one. So the good thing is that, again, we are not aiming to issue credits, for example. So anything that we propose to the investors to ensure the additionality and the impact will hopefully go ahead, or at least they will be willing to test. This is also good of having public investors that they're willing to test, and this is something we have experience with in other funds. So yeah, as long as it helps us to prove the impact and measure properly the outcomes that we're having, hopefully yes, it can. Actually, they're so far trusting the CGR and our estimations, and now is the moment that we need to start measuring and proving those values.
Yeah. The market looks good for that. Fingers are crossed, but I'm sure this is going to happen quite soon. Another question, what are the main concerns regarding additionality from your potential investors, and can you explain us the difference between the public and private investors from your point of view? So you already mentioned it a little bit before in your presentation, but can you dive a little bit deeper here?
Some main things, and from the private side, and I would say this is personal opinion and not the company opinion. So most of the private investors that are climate aware, that what they want to do now is to decrease the intensity of their portfolios, the greenhouse intensity of the portfolios. Agriculture is a great space to enter, but then it will force us to measure not only the savings but also the emissions of each individual project, that, let's say, net emissions to the atmosphere. I don't know, if we build a new processing plant, all the consumption of the plant has to be monitored and measured in order to properly report back to investors in that front. But from experience, because we have to do it for regulatory purpose, and especially soon with the Sustainable Finance Disclosure Regulation and the taxonomy regulation, agricultural products have a far lower intensity compared to even our energy efficiency products or microfinance products. Why? Let's say a typical example is in electric vehicles or Yes, there is a lot of savings, but there's a lot of intensity in the manufacturing of the vehicle. So far, it's going down, but it's still high compared to, for example, reduce tillage or improve fertilizer use, which is almost pure savings. There is still, of course, some emissions. I would say every dollar we put that is not capturing CO2 or through nature-based solutions or engineering solutions is creating emissions somehow. So, but it's far lower. So private investors are taking care of this lower intensity of the portfolios. Some of them care about being able to invest and then claim the reductions back, and this is where the credits enter into place, because most of them would like only to have verified credits by, of course, reputable companies like Vera or Gold Standard, and we appreciate that front, but you saw how complex is the process. On the public side, they know us and they know our track record. Our process are also externally verified in the climate finance space every 3 years. Our reporting is externally verified. So they care more about the outcome, no? and the impact, and that's why some of them even provide additional funding in the form of grants to ensure that the impact is properly measured and to be able to innovate. So there are one of course is future looking, that is the private ones and on their portfolio, and the public ones, of course, is more altruism and they look forward for the outcome. But they're also expanding this idea to going beyond mitigation and thinking more about other SDGs.
Yeah, there might be also more pressure behind it, of course. Yes. Okay, another question. What is the selection process criteria for projects to be selected?
Good question. So we have set up, there are two main filters, let's say. One is a general impact filter by responsibility, in which we assess the additionality in terms of investment. And I come here to not only what was mentioned before on IRR numbers, but on what I mentioned for the Cambodia example, access to finance, if they have access to finance, so it's easy to access, what are the expected outcomes in terms of livelihoods. And then for this specific product, we have the contribution in the three KPIs that I mentioned. No? So what is expected contribution in terms of climate change mitigation, what is expected contribution in terms of improved resilience and adaptation, and what are the expected improvement in productivity. If you have a specific project, please reach out and we can discuss separately. Of course, environmental and social practice, well implemented, HR policies. So there it starts to be a more detailed due diligence process. But the key one, one of our main difference compared to, I would say, other competitors, let's say, is that our first filter is the impact. So we look first at the impact and the environmental and social aspects and the potential contribution to the mission of the fund, and then we look at the financial part.
Yeah, Michiel already said he will reach out to you for sure. So
there are some constraints that are set by investors and by ourselves. So we mentioned at the beginning, only emerging markets, and there are certain risk criteria, but happy to look into it. Thanks.
Perfect, thank you. Another question: what is the importance of third-party validation of your outcomes? So, how important is third validation here?
You mean external validation or
third-party validation of
third-party validation?
Project?
Yes, correct. Also, and goes back to the question on the private-public investor. It helps, especially with the private ones, but with public ones, yeah, it always helps, I would say, because it shows transparency, integrity. Some of them don't ask because it's again the track record of the company, and they themselves do extensive due diligence process on us before investing or before assigning a mandate. So when that's enough, which is a very, very deep and complex and complete process, then it's okay. But some of them prefer to rely on third-party validation. So in some cases, it will become mandatory also by regulation to have third-party validation of the outcomes. But yeah, I would say it's if you tend to talk about private investors, and third-party validation becomes more relevant.
Okay, now we're back at the topic of transparency, where we were talking with Marianne. So very interesting. Thank you. And I have a last question here for you. Is there going to be a fundamental reshaping of finance, according to you? And how do you think is this going to happen?
There will be. So sustainable investment is. I recently saw a graph was by a colleague that was presenting here that the whole investment world is close to 90 trillion. Sustainable investment is growing, and it's more half of that. Probably that's why regulation wants to really define what is sustainable investment, because it's become larger and larger. Impact investing, that's what we focus in, is still one step more, considering beyond sustainability is like really shifting minds and processes. It's still a niche compared to the full investment world. There will be a shift, but again, I think it was also mentioned before, there is still expectations on return. We're still talking about investments. I think investors have become more conscious on where to place the money, but they still have the investment in mind, no? and expecting a return, just trying to do it in the best way possible.
Okay, thank you very much for that. Yes, it's true. Mostly return is still a very prominent topic, but we can already see a shift towards more impact focused approaches. So yeah, we have almost reached the end of your presentation, of the time of your slot. Is there anything else you want to add on?
No, just again, thank you to the team. Thanks for the questions. Please reach out. We'll continue working together for sure. And yeah, follow us to see the developments on this and other products, and can be interesting, and happy to chat about impact. Is what is the passion that we have and we share.
We definitely share, and we will follow up on that. So I wish you a good afternoon, and thank you for joining us.
Thanks. Good afternoon to you.
Thank you. So I will move on to our next speaker, who can tell us more about this topic for sure. Alexandre Bort, co-founder and CEO of Cibola Partners, who started his career as environmental economist at the World Bank before joining the FAO, the Food and Agriculture Organization of the United Nations. In his 25 years of experience in development and environmental economics, natural resources management, and climate change mitigation, he focused on topics such as disaster risk reduction, regional and international negotiations, and climate and carbon finance. Today, we are happy to have him as our guest, giving us an insight into the logic